The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman. This is the Tiger Technicians Hour, the day before Thanksgiving. I want to wish you all just a fantastic Thanksgiving, one of my absolute favorite holidays. And at the same time, what we're looking at here is a situation where for us here at Tiger Financial News Network, we're going to be taking some time off. So I will not be here for Friday for the show. And we will be re-airing. You know, you got the archives, you got an incredible amount of information going on. And if I'm looking at the market at this particular point, look at this. Let me just show you a chart. If you're looking at Tiger TV, this is I believe it's the 27th session since the October 15th low bar, reversal day, a pattern that I call the Chapman wave Roman candle, but when it occurs at a potential low, it's a very powerful signal. And what we're looking at here is in the Chapman wave, you look for the lowest, most identifiable low bar, and then you merely count each successively higher peak. And here you go, peak A is that high on the 17th, so this is the Dow of October at 16,427 after the 15,855 low bar. Then you get peak B at 17,410. That's on the 3rd of November. You go all the way to 17,638 on the 11th of November, pull back for a day, and then go to a leg D. Your objective in the Chapman wave methodology is to go to a D. After that, other techniques are coming into play. So what we're looking at here, 17,705, the Dow makes a high bar, pulls back, and then goes slightly higher 3 days later to 17,735 and then pulls back fractionally. That's peak E. And now we've got an F/B at 17,894. At 17,894 made on the 21st of November, besides the fact that you've had only one ugly candle, that ugly candle when IBM dropped about 14 or 15 points on October the 22nd, there have been very few down days, and then they've just been nominally lower. In fact, I don't recall ever seeing in the Dow for this number of sessions in a buy mode, because we're in a buy mode really close to going to a sell signal, that you've seen this number of doji candles where the market opens and closes almost at the same price, creating this kind of plus sign. It looks like a plus sign. And if you had to count them, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I'm going to give that one a miss because it's a doji, but there's a different implication. No, I'm going to count because it opened and closed at the same price. 12, 13, 14 since the low bar. 14 out of 27 sessions. That's almost 50%, 47% or something. No, 49 27, that's actually better. It's 51%. What we're looking at is something very unusual. But actually what I'm looking at here, and I'm going to go to another chart here. Let me go to this. This is the dollar chart, made a peak F top. We'll talk about that in a moment. What I'm looking at here is that the MACD, the moving average convergence divergence, at just for the first time since it crossed positive on October the 23rd, that's the green and red moving averages right there, has the potential today to close lower. The stochastic, which has been up in the 95%, 97, you remember it was almost, it was unbelievable. In fact, let me double check here. The unbalanced, the slow stochastic went to 98%, 99%, 99.50. Look at this, 99.08 on the 7th of November. This is out of 100. 99.50. This is the slow D out of the slow K. Slow K is the fast moving average. And then 99.47 on the 11th of November. That is truly remarkable. And all it can do after that is go down. But here's the issue. Is this really just a high-level consolidation? After all, you've gone sideways many times and then broken out to the upside. Is this yet another one with a spike to the upside? Well, my contention is, and this is what I've been discussing with my, I haven't discussed it, I'm the one that's talking about it, that I've been mentioning over and over for the last week or so, is that the way, let me pull this out, I want to show you something really interesting. Having done this for 30-something years, over 30 years, and made a daily call on the Dow almost every single day that I'm around to do it, you kind of get a feel for something. And I know the way the Dow smashed through the 10,000 level way back, going to the 2000, let me just get the chart right here, going back to the 2000, oops, I didn't mean to do that, sorry, going back to the 2000 top. Remember, on the way up, what we were looking at is how does the Dow, if I can find it, I'll try to find it right here, because it's very interesting. I'm trying to piece the whole thing together here. So if I can just find a Dow monthly chart, S&P monthly, do I have the Dow monthly? Yes, I do, right there. So let's see if this is the one. I hope this is the one. Yes, this is the one. Going to the top of 11,749 back in January of 2000, peak E in the Chapman Wave Monthly, we just went right through that 10,000. Let me put it in here. The 10,000 level is right there. You remember CNBC had the 10,000 hats? Dow 10,000, they kept talking. There was a little thing saying the mark's down, or the countdown towards 10,000. And right here, we just went right through it, went above it, went to 11,749. That was a mid-January all-time high, and then kaplop, it went down to the October low of 71.97 of 2002. But look at the way it went up through the 10,000 level and then back down. Well, if you had to do this on all the millennium numbers, 9,000, 8,000, you would find that there is a time, and now we can go to the 11,000 level, there is a time where there is a lot of resistance right there. And that's that resistance that you went like a sine wave. You went up and down and up and down and around until eventually that became not support but resistance and kaplop. So the way we've gone through the 16,000 level reminds me very much. This is now, I've got to move this over here. I don't usually show this chart. I'm not even going to discuss it. It's a very special chart. I just wanted to show it because it's the easiest one that I could grab. So, in other words, what we've done is the Dow's gone from 6,469 March of 2009. It's really zapped through, except for the 11,000 area where it kind of hung around up and down and up and down. It's really gone through all these millennium levels very easily. And I'm suspecting that at least in the shorter term, let me move this away, the 17,000 900s is going to be strong resistance, because I think that 18,000 is going to be very difficult to get through. It might break once, but I don't think it's going to be sustained at this particular time. Later, I believe that that's going to happen. But I would not be surprised if we do get some kind of a pullback. Now, for my subscribers, we've been long ever since we reversed from the short side. All short positions got reversed to long positions in mid-October as we turned around. And now we've raised some cash. We still have long positions. But I'm beginning to look at this and say, now you're really starting to struggle. And I would rather be looking at a couple of short positions and looking to see where I would add to the long positions. So let me just go through the numbers. The Dow's down 5 at 17,809. No big deal. The S&P's up $1.78 to 2,068. The comp index is up 14 right now. So I've gone through some of those things. And what I want you to do is to say to you, for my subscribers, what I tend to do every single day, I just feel I have to do it. It just gives a nice feel for markets and what we're looking at, why we're looking at it. There are people that get my service for all sorts of reasons, whether they're fund managers, hedge fund managers, regular folks that just kind of they've got their own lives and they happen to have some interest in the market and they want to just keep up and they want to know the major trends. It's a service that kind of goes right to the nitty-gritties of almost like day trading to the longer term. And we try to keep positions as long as we can. Right now, I'm lightening up on some of the positions. There are a couple that one I would love for it to once again be one of our longer term positions. I don't think it's going to work out. So far, it's a lovely percentage gain, but hey, I don't know if it's going to continue that way. And then there's another one that is really an economic play and a sector play that we've got a half a position in, and I would love to see us not get taken out of this. But believe me, I am going to make the stops really tight here because I have this inkling that it's going to be a surprise move to the downside. So my overview that I give every day goes through the Dow 120-minute chart right there, the VIX, the volatility index, trading at 1209, down 16 cents right there. That's not any use anymore. Then over here we've got Richard Arm's Chin index, short-term trading index, and here I've got the daily and the daily Dow and the daily S&P. We'll be right back. We'll be right back straight after this message. Basil Chapman, Tiger Technician Seller, Charles Down.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive The Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the path of least resistance under trading newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and we're just looking at the dollar. I just want to explain what I'm looking at. Then we're going to go to our callers, and right now you've got the dollar at 88.44, the high that was made 3 days ago. There's the leg, there's the body, there's the neck, there's the head, there's the beak. This is Chap Wave stalk leg formation, and if the dollar takes out 87.18, in other words, if it closes on any daily chart, not the weekly, but on the daily chart, if it closes under 87, then that 86.74 level in the 9-period moving average in the weekly chart is going to become really important. My suspicion is that we've got about 2 weeks, maybe 3 weeks of the dollar consolidating. And in that time, we're going to be watching to see, does gold start to move to the upside? Let me get rid of this right now, because that's the juxtaposition, the counter. You know, in Bach music, you get a melody going up in the one voice and a melody going down. It's called counterpoint. We get that same counterpoint when bonds go up, yields go down. When gold goes normally, not all the time, but about 85% of the time, could be about maybe 88 to even 90%. When the dollar goes up, gold goes down and vice versa. Occasionally they travel in the same direction. That doesn't happen for very long. So I'm going to be watching this real closely. Why? Because in my longer term outlook, I had said that I thought December could be the first time that we get a really good rally. I don't yet have the technical verification in the weekly chart. Is still very flat. And my thinking here is that we're going to get a rotational correction, a very quick rotational correction, and the biotechs are going to come down. The emerging markets might find buyers in this particular move down, and we're going to be watching real closely to see what the semiconductors do, but most importantly, what the volatility index does, what bonds do, certainly what the dollar and gold do. So it's VIXY, Bondi, and Dolly. Those are the things that we'll be watching quite closely. And I'm going to go to Mac in Fort Lauderdale, Florida. We're moving from the rainy, kind of coolish northeast, although there's snow in some parts in the Connecticut area, right down to sunny, I hope, Tallahassee, Florida. No, Fort Lauderdale, Florida. Hi, how are you, Mac?
Good morning, Basil, and happy Thanksgiving to you.
Absolutely, to you too.
I just, with your experience, I'm talking about CLAC with the ex-dividend today. It went down so much. After ex-dividend, do you find the stock continues the trend that it was in, or do we just sit around here for a while?
You know, that's a really good question. Once in a while, I'll get to deal with it, and I haven't actually spoken about it for, I couldn't even imagine how long ago. Most importantly, folks, that's the reason one of the only reasons why, if I'm a little careless and I haven't been looking to see when there's going to be a dividend, I could get stopped, well, my subscribers would get stopped out of a position because I did not include the dividend, because the dividend comes out of the stock. Sometimes it'll hit the stop. We haven't had that happen for a long, long, long time. And it's always unfortunate because, yeah, you are getting paid for the dividend, but you get stopped out on that same day. So in this particular instance, it's really nothing much. It's only 44 cents on a $67.24 stock, KLAC. Now, we used to love this thing way back in the how long does this go back? Because I know Click and Clack. This is both
the dividend isn't right. For some reason on that chart, yesterday it closed at 84.21. So it's down quite a bit.
Oh.
They must have treated that chart like a stock split, but that's down.
Did they split or did they spin something off?
No, they just gave out a dividend.
They gave out a dividend. That's why I have, because I know I notated this at some point. It might be somewhere up here. No, I don't see it. So yeah, I remember this back in the 98-99 period. And one of the reasons why I've always kept it in mind, it's one of the very few stocks, the major stocks that was absolutely participating in the huge mega run-up that the NASDAQ had going to the March highs. And this thing didn't go to a leg D in the monthly chart as almost all the stocks. Oh, wait a minute. It depends when you count it. It went A, B, C, D, and I remember there was something funny going on. Oh, this was a huge leg E to the upside. Now I remember what it was. So CLAC is the one that's just remained in many of us who have traded the stock, it's remained in our minds as a monster to the upside. This is a parabolic move that it had back in the going to the high of 81.25 in April, the next month after the March high in the NASDAQ and the semis. Now, let me just ask you a quick question. Do you own the stock?
No.
And is the stock that you're interested in buying because it's done well and you like it and there's something about it that attracts you other than the price?
So since it was doing well, and ex-dividend is down $16, $17, I just wondered if
in the den, Jim in the den said it's a $16.50 dividend. Wow, let's talk about...
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Good. Just click the banner. We're looking at Clack. Not looking at Click. So, looking at KFC Corporation. And it is just a beautiful looking chart. The monthly chart I've got here is a leg F. And everything about it on the technical side that says that this is a move. I would not say it's a final move, but it is a move that has all the characteristics that says when it makes its top, it's going to make a top in time and price. That's the monthly, but we haven't got to the top yet. The weekly is the chart that says the pattern from the October 15th low, the week of the 17th of October, going to the both of the highs that were made. This is the peak. I've called it a D for the moment at 65.53 of the 7th of November. And this week, the week of the 28th of November, leg E has all the characteristics that says, gee, this really looks like it's a brand new leg A going to a leg B in a weekly chart. The stochastics at 91% and the MACD is very good. So when I have that kind of conflict, I turn around and I say, don't get carried away. There's nothing negative yet. Whatever the lettering is, if you were just looking at the chart, everything about the chart in the weekly is very positive. Everything about the chart right at this moment is very positive in the monthly. So let's look at the daily. Now, I didn't have a chance to notate the daily, but I'm going to do it very quickly here. And I'm going to say to you, this is A, B, C. This is leg D. This is where you'd expect some resistance. And I think we're going to get it. Stochastics at 90%. MACD's flattening out in that M-shaped pattern. I would do this. If you do not have it, have patience. I would not chase this now. Why? Because I don't think there's more than about 1.5 or 2 points before it has a bit of a correction. That's the maximum I see on the upside right now. But I definitely do see a pattern that says there's a chance that 67.08, it's going to drop 5% to 7% over the next couple of weeks. And if it does that, I would look to buy it between 64.30 and somewhere around 62.80, maybe 63. Just if that area starts to hold this support, you'd be looking at time rather than price. So I'm going to recommend, Mac, that you have a little patience. You know, if you really want, you could just buy just kind of a little bit right now in case it starts to go up. And I'm totally wrong. If you asked me exactly what would I do, I'd say I'd wait. I don't think it's going to fill the gap at 61.7. What is that? 61.49. I don't think it's going to fill that gap. It's just had a massive decline only because of the dividend. A fantastic dividend of 16. Wow, $16 something. And I don't think I would want to. Steve Rhodes says previous dividends around 0.50, but not today's. It's at 16.50. So this is an aberration. This is very unusual.
Yeah, but why do they treat your chart like a stock split when it's actually a gap down of $16, $17?
That's a really good question. I have no idea why they've readjusted. It looks like they've readjusted the chart. I don't have any notation there at all, but that could just be because I haven't notated for a while, longer than I thought. But you know what? I still, even with the dividend, I'd find out a little bit more over the next couple of days. Just pick up a newspaper, go online, check it out, because right online it said will begin trading ex-dividend on November the 26th, 2014, and I haven't been able to follow up much more than that in the information. So, and there you are. Jim just went to Finance Yahoo, and he's got some news. Special cash dividend. Sometimes they do that. They just say, hey, we're going to declare an unusual extra dividend.
Will the stock, with your experience, will the stock follow the trend after ex-dividend?
After the ex-dividend, they invariably do not change trend. Whatever trend it's up or down, they stay in the trend. But this might be a different case, so I'm going to advise you, don't do anything right now. It's not as if tomorrow it's going to trade at 83 or something like that. This is the price that they got it now in the chart. Let's deal with that. And then it looks a little more like they spun something off, but they called it an ex-dividend. I'll try to get some information. I'll try to follow up on Monday. But in the meantime, I'd still say hold off. Don't do anything just yet, okay?
Thank you.
So, folks, we were looking at CLAC. That's Cal. I tell you, have a great Thanksgiving. Cal, 10 call. And now let's go to, we're going to go to Ben in Tallahassee. Ben, how are you?
Basil, how you doing?
I'm well, thank you.
Happy Thanksgiving.
Absolutely, same to you.
Yeah, great. Hey, just want to confirm, Amazon, is that a 120-minute peak C?
Oh, good question. Let me have a look. I did not look. Oh, yes, I did look at it. I've got an alternate count C/E because I continued the count because of the MACD did not. It deflected lower. The stochastic was moving lower, and everything about it said that it had more of the characteristics of what I call a right shoulder extension than a leg C that should go to a D. Now, if you want to be real fussy in the Chapman wave methodology, it's basically peak C1, then the little peak that you get at 11:30 on the 24th at 337.39, that is peak C2, and the one that's just next to it at 15:30 in the 3:30 in the afternoon, and it's trading at 337.38 is C3. So as it stands right now, I don't see anything negative in the daily price of Amazon. And in the 120-minute chart, it's really having a rectangle sideways move. And you know what I've been doing for my subscribers with Amazon, and we might just do the very same thing, expecting that the daily chart should go to a leg D at least 1 penny above the 338.33 previous high. And then I think you have to be a little bit careful with Amazon. But in the meantime, there's nothing really negative. And if you look at the technicals, you'll see that in the 120-minute chart, look, the price is holding beautifully, and yet the MACD and stochastic are pulling back. So that's saying there's probably a limited upside towards that 339 area, but at the same time, it's holding very well. And it should not break down unless it takes out 331.26, the low that was made on the 25th. Was that yesterday? Yesterday morning at 11:30.
Yeah, I was looking at this, and of course I'm a subscriber of yours, and I looked at this as maybe one of those very few stocks left where once it, because peak D in 120 is going to create the D in the daily. And I thought that would create the potential quick avalanche. Shouldn't say avalanche, but the drop in the market possibly.
That's because the S&P right now is holding quite nicely. It's not following the Dow, which is down 16, and the Nasdaq is up 17. You can see there's still internal strength. And my guess is that any negativity that comes is just going to be out of the blue. It's just going to be something that no one was expecting, although I did mention this morning what I thought were potential aspects that could pull the market down. But bad news, economic news, it might not even be the economic side. It might be what impacts the economy. So I'm watching this, and you know what? I want to keep the longs. I want to have specific shorts. I think this is a very good time where you can have some short side, not much, but some short side exposure as well as long exposure, because the market is, I'm not sure whether this is a distribution pattern in the Dow if you're looking at the daily chart again, that in fact it hasn't been able to break into the 18,000s because on every rally there's so many money fund managers trying to change positions, so they're getting out of stock to put it into something else that might not be working or hasn't been working, has just begun to work, and getting out of stocks that maybe they feel are overextended. But from the V-shaped pattern of the run from October the 15th, this is the first time that fund managers, as much as they've said on any 2-3% pullback we want to get in, I bet there are a lot that only started to get in out of desperation for because they wouldn't be beating the averages. They over the last 2.5 weeks they've been buying, and that could be why we're not getting upside extensions. We're getting support on the downside, and as soon as these fund managers say, "Okay, now I'm ready," that's when this market could pull back. But the pullback, I'm thinking, is short, sharp, sweet, get it over with. And the speed with which we correct is going to be really important on how we take out in the Dow 18,000s, how in the S&P we get to the, I would put it at, it doesn't have to be 2,100, but somewhere in the 209 area, 2019. That's even difficult to. So we've never been in the 2000s. It's hard to say 2000 in the S&P, but the 2000 it was at 666 at the March 9th low. So this is an amazing thing. Over 3 times. It's just a beautiful. This is the most hated mega. I've been saying this for 3 years. The most hated mega bull market that we've ever seen. So I'm watching this real closely. And the other thing about downside surprises, there's one that I have in mind in particular that I never experienced because it was way, way, way back, but it was so quick and so vicious, and then the market went on to all-time highs before turning down rather sharply. I would not be surprised if we're in the same situation now, that the surprises are going to be out of the blue, sharp pullback, and then we'll see if we're able to recover and have a nice January, maybe February rally. We'll see.
Sounds
but in the
good.
meantime, Amazon, Amazon is to me is a favorite right in this particular time frame. Why? Because I suspect that this might be the first time that they actually start to try to make profits instead of just creating the most incredible business model. They turn it into a profit machine. I would not be surprised if that's going to happen this year. So Amazon to me is a stock that I'm not sure I'd be looking at the short side of an Amazon, but definitely I'd be looking, how does it pull back? It has not come back. This is the period that it really should be close to the all-time high of 408.06. So I'm watching this really closely, because if it does start to fight, it's going to say, nope, it's just going to be another year where they have a fantastic product, fantastic sales, but they don't turn it into major, major profits. We'll see.
Yeah. Well, I really appreciate the accuracy on that and help me put that together in the 120 and the daily chart. So I got to get going here, so I wish you, again, a very happy Thanksgiving. And then sometime maybe between now and the end of the show, it would be great if you could just give a quick update on the daily and the weekly on the New York Stock Exchange. It would be awesome.
Oh, actually, this is a perfect time. All right, Ben. So thank you. Have a great Thanksgiving. Have a great long weekend, and hopefully we'll speak to you next week, and we'll see Amazon somewhere in the 339, 342 area. Have a good one.
Great. I got a call option on it.
Oh, okay.
Thanks, Basil.
Then you got to watch it a little more closely. But so far, I think it looks good position. Thank you for calling. So, folks, we'll go to the New York Stock Exchange. It was one of the ones that I was going to do yesterday, and I forgot. Look at this. There's an extension up, and this extension is at a very interesting level. There was a Chapman Wave instant restart from a peak D. I could call it a G, but I'm also going to say there's a chance that it's got, let me put this in, and you'll be able to see what I'm doing in the Chapman Wave methodology. And you know what's so beautiful about this particular technique, the instant restart? Invariably, it's because it's such a powerful move, a breakout move, invariably it gives you a little time to be able to make the decision whether you're now at a G or a C in the daily chart. And one of the things that I've been speaking about for some time, I hope I'm going to have time just to do this right here. I'm going to extend this out right there. I'm going to do this. I'm going to expand this so you can see what I'm talking about, because although this is not Friday, the last day of the week is usually where I get a little bit more into, we call it Technical Friday in the Chapman wave. Look what happened in the, look what happened in the S&P, SPX.X. It's also in a leg G/C. Nothing yet wrong with it. The MACD's holding. Stochastics at 91%. It would not surprise me to see a sudden pop-up to go to that leg D, which should be 1 penny above the 2074.21 high of the 25th yesterday. If we don't do it today, we could do it maybe on a very quiet Friday. But at the same time, what I am looking at is in the S&P, look at that up channel inside track resistance. Look at the NYA, same daily lettering as the S&P, but a very different chart pattern. It made a little V, and now it's making a larger V, and this goes into the category of one of the techniques that I spent a lot of time on. Haven't discussed it in ages. I haven't seen one for a while, and that's not the cup and handle pattern, but the inverted, it's not really inverted. It is reversed. Handle and cup. So there's the little handle, and now we get the larger cup. And what does it do? Well, two things. It does one thing and says that the upside from here is going to bump into quite a bit of resistance. That's normally what happens. And even if it goes a little bit above, it's going to have to come back and do some retesting below the lip of 11,107 that was made back in September. There's a weekly chart back in September. September. And then you could even turn it into a very positive head and shoulders, inverted head and shoulders. Hey, folks, I will be back straight after this by Basil Chapman. This is the 26th edition.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, don't forget, Larry Pesavento coming up to a great show, as always, with Larry. Just shows all the way through the day, plus archives, and have a great time this weekend listening to these. So now what we're looking at is, well, where was I? Looking at the NYA. So the NYA 120-minute chart has made a peak E, and I guess the fact that we're not going up is important. The fact that we're not going down is important. The fact that we're not going up in this particular phase with these tiny little doji candles and then like a stair-step move, a spiral up and then sideways, spiral up and then sideways, that says there's disbelief because many fund managers miss the move and then they're waiting for the move and the move gives them time but not price. Finally, now it's giving them time, not necessarily price, and we're going to see what happens, because if this is a shorter-term rotational aspect, then what we should see is some kind of a pullback that goes into maybe next week, and then we're going to have to watch things very closely to see what happens after that. So let me just run through a couple of things right now. So I'm going to go through the dollar again. The dollar, the levels to watch. Dollar's pulling back. This is a pattern that we're all very familiar with if you're used to my patterns in the Chapman Wave stork leg formation. So this is the neck. This is the head. And right now it's forming the beak. And what's really important about this, it's gone below the oval high that was at 88.27, and that says the most important thing for the dollar to hold is this is the index, is 87.18. A crack of that 87.18 level says be careful, there's no support whatsoever. My suspicion is that there is enough internal support that 200 period moving average at 87.56 is going to be key. So closing below the 87s says that this whole area here with that big spike, that gap up from this high bar of the 15th of 86.01. You know, when you start getting into this, it says you should pull back, make an arch formation. This is the inverted H, the backward Y pattern that says a breakdown, says you could easily have a 1-to-1 to the downside, which take it to about the 86.30 level, 86.10. And then if it closes under 86, you're looking at time. What would happen to gold prices? Well, this is the question. Are we going to see leg C? I think you will. You'll see leg C above, why am I looking at, the gold above 1,208.30. This is the gold, the December gold, continuous contract. And the whole thing says that this area between the gap from the high of the October the 30th, 12.17.20 to the, it's not really a gap, it's a close. So anywhere from that level, right here, this is the candle that I'm looking at. The candle of the 27th of October, 12.32. Let's call it 12.33. So if there is a break and you go to a leg C, you should see something that says 12.25 to 12.30s would be the natural up channel sequence on the upside, and then you would see a test of that candle right there. So that's the way I'm looking at it. On the downside, there are two fighting patterns, but I think the pattern that's winning right now is not the arch formation, but the cup formation. So it says, be careful, because if gold starts to trade underneath 1180, it's at 1198 right now, 1180 to the 1170 area, it says, hey, it's not participating and the dollar is going to hold a lot better. So what we're looking at is dollar is going to dictate, and right now it's got a shorter term sell signal almost in place. I won't know until Friday. And if that's the case, then I think there's a consolidation going on in the dollar, and that should help gold. Keep in mind the VIX index. If at any point into Monday, the volatility index is trading not at 1198, but instead it is trading in the 1350 to the 1420 area, we will have some kind of a pullback in the market. Have a wonderful Thanksgiving, everybody.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.